Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Sunday Roast. It's Sunday the 16th of October, and what a week it's been. Kwasi Kwarteng sacked on Friday, landing with jet lag. Can you imagine that, landing into Heathrow, jet lagged and told you sacked? Previous 24 hours, he was asked by a pundit or a newsreader. Somebody said to him, "Are you pretty confident you're safe in your job?" And he said 100%. Doesn't really get much more embarrassing than that. So cut his holiday short, and then there's been a U-turn on the corporation tax, so that will go up from 19% to 25% from April. What do you think, Kev? It's been a disaster, hasn't it?
He wasn't on holiday. He was actually with a group of other ministers from other countries.
He was on holiday. That's everything over there. When they go abroad, it's a holiday, right?
He was with a group of ministers who were all chancellors of the exchequer, and they were talking to him, and then he came back and he got fired. So they'll be all like, "Oh, that was worthwhile meeting with him." Yeah, it's just a disaster politically for the last 5 or 6 years since Brexit vote. We're the laughing stock. The UK is the laughing stock. It's a joke. Doesn't matter who's in charge. It seems to be just like from one disaster to the next. And is it going to get any better now? I doubt it.
We've had a chancellor a month since July. Rishi, Naveen, previous, I can't even name them.
Well, we were saying before we started recording, you said to me, at least he's got an economics degree. And I said, well, I've got an economics degree. Does that mean I should be the chancellor? I'd probably be far too optimistic anyway.
Now we've got Jeremy Hunt, as you said, he's got an economics degree. He's education minister. So yeah, it is a mess. You're absolutely right. I think that's exactly what it is. A complete mess. And now the corporation tax, increase from 19 to 25%. It's not exactly a way of endearing yourself or making the UK more attractive as a destination for foreign investment when they do things like this. UK has now got one of the highest corporation taxes in the developed world, and only Japan and Australia have higher taxes. So not ideal, really, is it, in terms of encouraging investment in the UK?
Well, if you want growth, as she said, then you're not going to get it this way. But This is the whole game of politics at the minute, isn't it? It's just a big game, and ultimately nobody's looking long term. Nobody is looking long term about what is the best for the country. But at the same time, the markets are a bit scared because effectively now the UK is the UK. It's on its own. So it has to stand on its own. It's not going to get bailed out by anybody. So with the European Union protection, we had security that we didn't realize we had. And now we know we don't have it, and what's happened this week and the last few weeks is proving that completely, that we are on our own and we have to be fiscally responsible. And if we're not, we're going to be in big trouble. And this is what's happened. And what happens? The big players attack the weakness. So this is what's happening. They're attacking the weakness.
I mean,
I think everybody, honestly, is probably bored stiff.
Bored of hearing
about it.
We're bored of talking about it. The only thing I will finish on a lighter note is the Liz versus Lettuce webcam, which you can actually go online. The Daily Star and the Sun are running it. And it's entitled, "Can Liz Truss Outlast the Lettuce? Will Liz Truss still be Prime Minister within the 10-day shelf life of a lettuce?" So you can actually watch that one live if you've got 10 days to sit up in front of the webcam and watch it go turn brown or whatever and find out whether she will outlive a lettuce. Moving on. Obviously, this week I was in London. I visited on Thursday and attended the Galileo Resources AGM. And caught up with the board of Galileo, including Colin Bird, Executive Chairman of Galileo Resources. Welcome, Colin. How are you?
Welcome. Thank you very much indeed. Nice to be here. Good to see you at the AGM.
Very good. Yeah, I mean, it was great, actually. It was really good. The one bit that got me was you did a deep dive into all the projects and all the assets that Galileo has. Do you want to elaborate a little bit more on that? Because I think for the listeners, it would give them a chance to actually really explore what Galileo's all about.
That's right. And often we sort of take for granted that the listeners do know what Galileo is all about. And of course, that's continual presence makes one make assumptions. And it is quite an interesting, diverse portfolio. And so, thank you for the opportunity. I don't know if you noticed, I was struggling a bit, Phil, to prioritize. And Shingander came last of all, when I don't know if it's first of all, but I guess that if you want me, so the dissertation today will be in no particular order of preference, but will just be across the board. So if we finish with Shingander at the AGM, let's start with it.
Yeah, this now Shingander's is the gold project, right?
Well, not really. It's not. It has gold, high proportions of gold, and it's in Zambia, north central region. It was Vale, the Brazilian company. They had it in the past, and they formed something, identified, shall we say, or created a trend which they called the Gerard trend, and drilled some holes. And what they got on surface, they couldn't repeat at depth. But we took this project on because it was a big area, and the result was interesting. They got, and the fact that they couldn't continue it, I didn't really faze me too much, because what our geologists saw and what all the reports said is there's hematite in the area. And of course, we went in and did the usual thing that juniors do. We took plenty of grab samples, came up with some very interesting gold, got an association with the hematite and gold, and started developing in our own minds an IOCG model. Now, academia has talked about IOCGs in Zambia for years. BHP was there, I don't know, it's the 70s, early 80s probably. And they were working, and there was the Darling of London was a company, I think it's called Blackthorn Resources. Some nice grades, copper, gold. And this was the first iron oxide copper gold project in Zambia, supposedly. And then BHP went for their own reasons. And I suspect it wasn't technical. I think it was more, we don't want to be in this part of the world. That wasn't this project. That was, the region. So when I say academia talks about central Zambia. So Valley went on, and they did some great geophysics. And we inherited a really good data set, which would cost you quite a lot of money to generate. And we tested the Gerard trend, like what we saw, but did some more work, some more desk research, a lot of field work. And the discipline, the geological discipline now, sometimes even very well-trained geologists start at D instead of A. And you can't beat the good old field work. And we did a stack of field work and decided in our mind that yes, the Gerard trend could be a trend, but we do like certain other areas. And we started drilling, and lo and behold, we had that 1.5%, which you referred to in the meeting yesterday, I recall, Phil, over 50 odd meters. And then we got gold in association with the saprolite and in association with the hematite. And we had a lot of intersections, a lot of mixed copper and gold, extremely good gold values with nice grades of copper. And since then, we've pitted, and we're back there. And we've decided to do more pitting and drill. And we're not drilling now for a trend. I don't think we're looking for something which is in a straight line and you say, oh, well, that's strike extension. Because if you drill north and south, east and west, you're getting this hematite, getting this saprolite, and you're getting indications of mineralization. So it's leading more and more to the IOCG model. It's also leading to an outside possibility. And I don't know why I've used the word outside. It's leading to a possibility that, in actual fact, we could be looking at Congo-style mineralization, because that does happen. And it could lead to the fact that it's a hybrid. One of the major mining companies' director of exploration said to me, don't be disappointed if all of a sudden in your middle of your IOCG model, you start finding standard copper belt type mineralization. We've got a similar situation. It looks like it's an hybrid. And we're absolutely delighted with what we're finding. And so we've got a man from academia, a gentleman from academia, and we're sharing the cost with the major, who's actually going to come and look at what we've got, and bringing a PhD guy with him as well, who's an expert on this sort of mineralization presentation. And I think we've got something really very, very interesting, because but in academic interest isn't commercial gain for shareholders. Sure. So, but it's big, it's looking to grow, and what we're doing now is moving on towards a focus on where we direct the drilling. And it doesn't really matter, Phil, whether you call it an IOCG, an hybrid copper belt, Congo style coal, Visa mineralization. As long as it's got a stack of copper and gold in it, it'll do for us. And I'm personally very excited about it. So yeah, we finished with that yesterday. And then let's move on to, if you like,
Colin, before we move on to say Luan Sobi or whatever's next. Do you want? I'm right in thinking the option agreement with it for the Shinganda gives Galileo the right to earn an initial 51% interest in that actual project itself.
That's correct. And then depending on how much we find, our interest goes up in terms of a sale. And then, of course, if we don't find the big one, and we go on to a mine, there's a profit share with the people we're dealing with, our partners. Yes. So there's kind of multiples within the equation.
And there are operations.
We're looking at something big.
And there are operations ongoing on the ground at Shinganda right now, yeah?
As you and I are talking, as we three are talking, we're drilling. You pick Luan Sabi, so I was going to go to the Kalahari. Let's go to Luan Sobi. We're drilling at Luan Sobi. There's a lot of action in our group, you know. It's not sort of walking around talking about the projects. It's not desk research. This is real action on the ground. And we're getting 13, I think there's 13 holes left now on the program. This program was a very commercial program, because we know we've got at least 3.5 million tons of open pit material, possibly 5, possibly 6. But in order to go out to tender, Kevin, Phil, you really need to know how much of earth you've got to move, if you like. How much muck have you got to shift to get at the ore? Because you know that they don't like in actual fact quoting on ore delivered to the pad. They like quoting on ore delivered, and they like quoting on overburden, shifted and stacked. I don't like that. I like basically to put the contractor under the pressure of having to deliver X tons of X grade, Y grade to the pad. And so therefore nobody's going to bid on that unless they know how much muck you've got to shift before you get to the ore body. So we did this exercise. This exercise is purely aimed at that. A lot of vertical holes, which you don't drill as a standard practice when you're looking for ore bodies. And that's been very surprising as well. It defined the pit shape pretty much as we expected. It curtailed it pretty much as we expected, but it did identify bigger, thicker packages. So I've got a sneaking suspicion that the pit might go a bit deeper. The effect of the overburden is shallower, but we'll certainly be in a position in a month's time to, in actual fact, have a pretty accurate pit profiles to go out and put a serious tender document out with a view to mining in the early part of next year. And that's the plan. There's plenty of processing capability nearby. And then, of course, that's not the be all and end of it. So if I'm aiming at 6 million ton, 10 years at 600,000 ton a year, that's a meaningful open pit. But of course, the deepest hole in this ore body went down to 1250. That's very deep. Can we go extra pits, put declines down? That's a question. And even before we actually got serious about this project, when we were scratching our heads about it when we first got in there, that was always my plan. But that plan is extending that this might be big enough for a major. And so then, of course, a ramp system, by definition, is self-constraining. You can't truck out forever. And so you would have to sink vertical shafts And then again, back to the word hybrid, that might be an hybrid, a decline, and then you sink a vertical to pick up the lower reaches. But it's getting to look extremely exciting. And it's only about 10 miles from the main Muffle area smelter complex. So, what a nice position to be in, Phil. And we're excited about that. We're finishing the drill program. The drill program is aimed not at finding more ore, but defining that open pit to a standard whereby, and some majors don't do this, but I've seen so many people caught out by having the wrong plan, by having a row with the contractors, that I said to the team, look, let's really define this pit so that whoever tenders for it, whichever contractor tenders for it, after 3 or 4 months, we're not falling out about them about the information they got, not of a high enough standard for them to design their program and to cost their program, and therefore tender properly. So that's been a success. I'm very, very happy with that. And so, if with your permission, I'll move on to the Kalahari.
Yeah, absolutely. Let's go for it.
Well, Kalahari seems to be on fire at the minute. This Kalahari copper belt is everywhere, or you seem to start. There's various different companies involved, obviously, and the majors are circling around this copper belt. So, yeah, tell us more, Colin.
Kevin, you've got a wonderful way of taking the words out of my mouth. I mean, I can't. That's
a horrible thought.
Yes, I'm having bad feelings about this stuff.
It's a compliment, Kevin.
Yes, we're just being rude, Colin. So don't worry.
No, it shows that you read your stuff and you know your stuff, and that to me, it's so important that you know your product. It doesn't matter what you're doing in life. You must know your product, and you've summed it up. It's not born again because it never died. But some of the age-old concepts and theories, Kevin, got buried by the recent Cobry announcement, and that was a good announcement, and it caused some excitement for the right reasons. It's far enough removed from Sandfire's T3 to possibly be standalone, far enough from Cooper Canyon's mine, what would they call it, Besito, something like that. It's far enough from that to be standalone. And of course, well, not of course, why should we use the word of course? But, we're right bang in the middle of it all. The licenses we gave to Sandfire, not gave, the licenses we've got the agreement with Sandfire, and the licenses we retained. And we've gone one step forward, a major step forward, which has been going on ever since the Cobry announcement. We've got a gentleman who I won't identify on this podcast, but who's so knowledgeable on that area, it can't, it really is. There's nobody can compete with him. He understands the mineralization and geology, I think, better than anyone. And so we've looked at all of our generated information, 39 and 40. We've looked at the positions. We've ranked all of our targets, 1 to 10. And, we've got very, very nice targets. And what he's sort of keen on is magnetic susceptibility. And so we're already redoing our cores and chips for magnetic susceptibility. And the indications are that the susceptibility was actually increasing when the geologists on site decided that we'd reached the contract. I think that probably we was fooled, and I think often people are fooled by what is in actual fact the Descartes contact. So highly encouraged, and instead of drilling one in the footwall of the first hole, we'll probably drill one in the hanging wall of the first hole, and we're pretty optimistic for mineralization. It's the area, of course, and the theories which are developing now. The domes are obviously very important and pointers, but the limbs of the dome is where the action might be. So I, for one, excited for what the deal with Sandfire, those licenses, and add a new wave of excitement following the Cobry discovery on the ones which we retained for Galileo and, of course, African Pioneer. So if you look at the number of licenses which was in 1, 2, 3 categorization, probably 30 to 40% are in that categorization.
Yeah.
So I've never had any doubts, and I've never been shy about saying I regard the Kalahari as not as a district, as a region, and that these first two discoveries are small discoveries. I'm even more bullish now, and I think Cobre have done a great job. And quite frankly, whatever benefits Cobre has got out of it are really accruing to Galileo as well.
Let's just wind back for listeners, because this is a very important point about the project. Initially, there was a conditional sale of 50% of the licenses to Sandfire, who are, as we know, are a very, they're a large company in terms of that they, you made the point that they were around about a billion market cap about a year ago, and they actually raised the same amount as their market cap to buy the Matza mine in Spain.
That's correct.
Okay, so they have 50% of the licenses. Now, there was a deferred payment of up to 80 million should any of the projects produce certain levels of contained copper. And obviously they agreed to pay Galileo, I think it was $1.5 million of cash, and issue something like 370,000 Sandfire shares, which at the time were worth, I think, $1.8 million. And the other thing is that Sandfire agreed to an aggressive 2-year exploration budget of $4 million. So that work's currently underway. I mean, obviously, they're about a year in, right?
Correct. That's absolutely correct, Phil.
Okay.
That's a good summary.
So basically, if for some reason they didn't meet their obligation, what would happen?
Well, the licenses would come back to us, of course.
And how would you feel about that? How would you feel about that?
That as that license opens up, I'm very, very, very pragmatic. There certainly won't, one doesn't want to be impolite, unethical. The reality of life is we are bullish for those projects. We've got an 80 million deferred consideration, if you like. So that would be a win for our shareholders. But equally, if somebody said I had to take them on tomorrow, I think, you might have a grin from ear to ear. So win-win, Phil. The reality of life is that we're into I don't like using art, we're into a very, 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 to an area of extremely high potential.
Yeah, so basically,
which is getting better understood by the day. And I don't know whether it's good judgment, good luck. I think it's a combination. But Cobre have unlocked that central point, which more or less sits between T3, which is Sandfire, and the guys over Cupric Canyon. And it's a system just ready for intense exploration. It's fairly shallow, makes all the right noises, and you won't believe it. We're with our license 253. We are in the middle of the Cobre discovery as well.
Wow. So I mean, just making the point that when you were talking about the drilling, you were obviously alluding to the retained licenses that Galileo has, right?
Oh, that's right. We're definitely going to climb into our licenses. And as I say, the Sandfire licenses, the ones they wanted to take on, they drew. I think they drew a circle around the T3 of about 25 kilometers, and then they made that nice discovery, A4 as they called it. And of course, the licenses 24, 250, 251 are nicely proximal to A4 and made absolute sense for Sandfire. But they also make absolute sense for us now when one looks at that central portion between T3 and the moving over to the northeast to Cupric Canyon. That area is wide open with now Cobre sat in the middle of it all and us. So the cookie has crumbled, and as you make discovery, as other companies third parties make discoveries, the logistics of the area change, and the strength of various projects change. The ability to stand alone and not be feed for Sandfire change. So I started, we started, Galileo probably started as a feed for Sandfire with an outside chance of finding something for ourselves. That's not the case anymore. The Cobre discovery and the address of our license position relative to discovery gives us a very, very good chance of being part of something different, something new.
How close are they, Colin, to Cobre's licenses?
One of our licenses is in the middle of it. So
they found all around it, and you've got the middle.
Yeah, they found all around it. And the trouble with Kevin, when you look at those pictures on the internet, they're huge tracts of ground. Sometimes you look at something and you think that's from one end of the street to the other. It's probably 60 kilometers. You're talking about really big areas. For example, proximal to the Cobry, we've got 10 kilometers made up, 12 in actual fact, 2 5s and a 2. So 12 kilometers, if you can get 12 kilometers of relative, of 10 meters, steeply dipping at 2%, you're going to build up a very nice package of ore, of mineralization.
Yeah, is it possible that Cobry comes in and says, "Here's a big check. We want that bit"?
No. Galileo was in pole position. This is if it's a Formula One job, we're in the starting blocks, Phil. Kevin. So at the moment, we're so pleased with what we've got. We ain't sharing no more. We'll collaborate and share. We'll collaborate, but we're not for dishing our assets out until we actually know what their value is relative to surrounding deposits.
One that really piqued my interest yesterday, and I didn't know really too much about it, was the Kamativi mine, which started out as a tin mine. Do you want to add something on that, Colin?
Yeah, isn't that interesting, Phil? Isn't that interesting, Kevin? It's been a tin mine for yonks. It's been one of the tin mines for a long, long time, the world tin mines. The Chinese have bought the dumps. The Chinese did a 400 million acquisition the other day in Zimbabwe, the other day being about 6 months ago, I think. But this 0.58% lithium in dump in Kamatavi there. So those pegmatites, when they were mining the tin, obviously contained lithium, and now they're going to beneficiate them from dumps. So if you've got 5.8 in dumps, there must, quite a bit lost in circuit. So you've got, tier 1 type grade here. We've took 700 samples already, and they are going to be tested for their lithium, tantalum, and tin, of course. Don't forget that tin is a commodity which is flying. And so that's going to point us on the first round of prospectivity. But, we've got 520 square kilometers, Phil. Massive. 520 square kilometers. It's a vast tract of ground. So that's attracted interest in its own rights. But I'm amazed sometimes, I sit and I pick up the paper and I sit up the mining journals and I pick up the trade magazines. I look at podcasts, and our people are so worked up about some of these lithium companies. 520 square kilometers where there's a dump with lithium in it. And quite frankly, I don't know if it's my fault or whether we've got a tired market on lithium and battery metals or whatever, but ours seems to have gone right over the top of everybody's head, Phil and Kevin, and they don't seem to have realized what a wonderful position Galileo's got. I guess discussions like this might help the market and the trade. The trade aren't asleep, thank God. The trade fully realize what the potential might be. And of course, the right people are wanting to know, where are you now? What have you done? What are your plans? What are you doing? Is there any scope for us to join in? All of that stuff you would expect. But the VC Ventures acquisition took us down to Bulawayo, and we were quite robust there. Within 5 minutes of being down there, 20, 30 kilometers northwest of Bulawayo, within 5 minutes of being there, we were flying the place. And, I think in my last 10 years, 15 years, that was the best result we've ever had, because, we didn't do the field work, as we thought there was enough field work done. There was artisanal workings. There's the Queen's Mine, which has been going quite a long time and producing quite steady profits, privately owned. But we suspected that all of the work was driven by companies that were not prepared to go deeper. And we suspected the gold trend went deeper. And we found those greenstones, yes, they did disappear below the sand cover, but there they were. So we found up 15 kilometers of greenstones. So that was great. We reckon that the Queen's Extension, let's call it the Queen's Extension, for lack of a better description, goes about 15 kilometers. But the super duper result was the fact we've also found and followed up ultramafics. So those ultramafics, are nickel bearing. We know they're nickel bearing. Oh, there goes Colin again. He's looking for gold and he's looking for lithium, and he's found some nickel. He can't help himself, this guy. The reality is there's the old Xingwandi mine, which wasn't very far away. So nickel, we wasn't looking for nickel, but nobody should be surprised that we think we've found the potential, and we've got 12.5. We've got 3. We've got a real nice oval. So it's more like an ellipse feature, which is fairly classical for nickel in that region. We've got a long strike area, which is 12.5 kilometers long, and another one 2.5 kilometers long. So we're doing to do best with our cash. We're running a program at the moment and preparing to take the drill machine in to follow up, whereby we test the gold and the nickel, and all our logistics are in one place. We don't want to be dotting around all over the place. So we will be busy shortly testing the gold and testing the nickel. And the gold, we're talking 3, 4, 5 grams, and we're talking not deep. We're not talking deep, Phil.
And the commitment there was to spend $1.5 million in a 2-year period, right? For the BC venture, 51%.
Yes, but that also includes Kamatavi as well as the gold. We've already postponed the best part of 700,000, so we're half the way there. And you will recall that some months ago we had an option to acquire 29% to take us up to 80. We've already done that too by the issue of 50 million Galileo shares.
Yeah.
So we're now, once we cross that threshold of 1.5 million, we're 80% owners in the project. So in the projects.
Yeah. And the other thing worth mentioning on the Bulawayo gold is that, as for a reference point for listeners, is that you've actually got Caledonia Mining Corporation, who I think are an AIM listed. Yeah, they're an AIM listed company, and they're producing 55,000 ounces of gold, or certainly did in 2019. So, any comments on that as a kind of reference point?
Yeah, well, Caledonian is a really a shining example of a company with perseverance, with direction, focus. I think that they pay a dividend, Phil. I'm not sure or not, but consistent performance. I think they announced not so long ago expansion plans, and they're the classic example of a company, no nonsense, got in there, doing the work, doing a good job, and fitting in. You can say what you like about Zimbabwe. Zimbabwe are committed to the re-emergence, if you like, of their mining industry and tourism. And it's the country to be. Phil, Kevin, I've seen it so many times in my career. You can book a ticket the same morning on an airplane to go to some of these places in the world, and then all of a sudden the lights come on, and it takes you 3 months to get there because you can't book a plane to save your life. I've got a feeling, and I've had it for a couple of years now, that Zimbabwe will be that place.
Yeah, because
it's a paradox. It's a paradox. Is Zimbabwe? Yeah. It's all little miners, mom and pop operations on tremendous belts of gold, copper, not so much copper, gold, and as I say, tin, nickel, and lots of diamonds. But they've always been mom and pop without really too many big operations. And yet, in most of the metals, there is the opportunity for deeper, bigger, more sustainable operations. And I think the mining world will wake up to that, and the planes will be full again. Yeah. It's a great country. They're very entrepreneurial, very capable, and I look forward to being part of that re-emergence.
Yeah. I mean, that blanket mine I just alluded to earlier has produced over 1 million ounces of gold to date, which is phenomenal. I mean, what sort of numbers? I mean, Kev's the numbers man, but that's a lot of output, and they've done very well, haven't they?
That's a serious mine, Phil. It's a serious mine, and you can't beat consistency. Not a 5-day wonder.
No, I mean, even if Bulawayo's a tenth of that, it would be a resounding success.
It'd be more than a tenth, a lot more. I think we're looking for I think we're looking for an open pit proposition, which is always good to me. Given a chance between open pit and underground, obviously one wants to be open pit, and then I think that open pit will be going underground, and then we've got processing capability nearby. And I don't know if you've noticed what my modus operandi has been today, gents. In the last few years, is that if you've got a plant nearby, work with the guys, because as often as not, they're getting shorter feed. So if you can actually help them to perpetuate the life of that mine by finding more feed whilst pursuing a bigger program. That has to be the way forward. It's good from a sustainability point of view. It's good from corporate governance, going into a country and helping the locals to extend the life of their mine, prolong the life of their mines, or extend the capacity of their plants. So it ticks every set box in the book. But in these uncertain times, if you can get cash flow, it's even more important as well.
Sure. Talking of cash flow, that kind of segues into the Glenover Afrimat assets. Do you want to just talk us through how significant that could be if they decide to take the option? I think the deadline's the 10th of November.
That's right. Well, you'll know that phase one consisted of the stockpiles and the vermiculite potential. So they paid for that, and I think we got the best part of £4.5 million in the kitty for that. Phase two, today's exchange rate and what they would have to pay amounts to another £5.2 million. So here we are now in October. We're probably just a month away from decision day. One will have seen podcasts from Afrimat and I think there's been reference to it on bulletin boards. But the fat lady certainly hasn't sung yet. Check the bank every second day for a check, and there isn't one. So I think that we're positive. But you've got to remember, gents, that we've learned an awful lot during this period about, that Afrimat is a very professional company. They don't do things by half. They spent a full year of evaluation, test work, to the point of sending the water to China to be tested, the local water. And there's been some really high-class processing work carried out, and market suitability of the final saleable product. And of course, they have to get the edge, like we've all got to get their edge around rare earths. Now, what's happened over the last 6 months? If you remember, if you went back to 2011, 2010, they formed a Senate committee to actually work how they might fund and how the West might be self-sufficient in rare earths. That just died a natural death, Phil, in around about 2014. But most rare earths are, in deficit for military purposes, guidance systems and that, for missiles and that. So it's become very topical. That Senate committee has been reformed. A new Senate committee has been reformed. There's a new impetus for the West to be self-sufficient in rare earths. And so I would imagine that phase two does involve rare earths to a certain degree. So not to a certain degree, to a great degree. So I should imagine that will help the Afrimat thinking as well. So all in all, we're waiting to be advised whether or not they wish to exercise option two. And likewise, of course, we've learned so much that if they didn't exercise phase two, it wouldn't be a train smash, because we know exactly what we would want to be doing. We'd be producing a similar product, and we'd have the benefit of the rare earths to sell on as an upgraded rare earth from our flotation work. So we've learned a hell of a lot, and of course, feed the world that phosphate. If you just granulate it and sell it to in northern countries or to India, that's got a value that 3 or 4 years ago it never had. So again, there's tremendous opportunities whether or not Afrimat exercise their option. But of course, we're halfway through it, and the ideal result for the company and its shareholders would be the sale is concluded in entirety. But again, as I say, it wouldn't be a train smash if it wasn't.
I think that's a great summary. I mean, just wrapping up in terms, is there anything else you want to add, Colin, before we kind of summarize it?
Not really, but that it was a useful exercise. You don't actually, the management team, when we sit around, you don't actually do what we did today and what we did yesterday. And to sit back and look at your own project portfolio dispassionately, like I did yesterday, and as I say, repeating it again today, it's quite an impressive. Even though I say it myself, I'm so pleased that we've managed as a team, and I've got a great team now. Technically, corporately, geologically, new faces, and we really reinforced our team. You know, I can't do this on my own. It's not Colin Bird. I've got a great team of people who know the game, know the way around, operated at new business level for big companies. So, we've got a new guy coming on board now who's got an investment banking background to help us. So it's a very strong, broad-based team with a great portfolio. And I left that meeting yesterday with a good feeling, Phil. And and that's why I'm very happy that you invited me to come on to this week's Sunday roast, because
I think it's important.
It's lovely to, you sometimes you're so heads down that you don't realize what you've got.
Yeah, I think you asked me to sort of summarize it in the meeting, and I said, with such a fantastic portfolio of assets, you only really need one of them to come off or come to fruition, or to come off, and it's a game changer for the company.
Yeah, exactly. It's a pleasure, now. I used to be biting my fingernails driving a front seat and back seat, and that. But we're going back 4 years now. We've got young guys come in, we've got seasoned, mature guys who've been around a while, and our team is experienced enough, qualified enough to take all of these projects forward. So, you can talk about money as a key resource, it is, but the people resource must never be overlooked. And we've got a strong team, and I'm proud of it. Proud of them, all of them. A pleasure to work with.
Yeah, it seems like you're heading towards, as Phil said, any one of these comes in and it's going to make this company probably worth $100 million, £100 million, whatever you want to say nowadays. But I think from what you've said and listening to all about all the 4 projects, that, there's a very high probability that more than one is going to come in. And, that could really change the face of Galileo, looking at 15, 16 million pound market cap now, and potentially much, much bigger. AFP is also in that same game, obviously, in the Kalahari copper belt. So, yeah, exciting times ahead, I think, even though all around us, the world seems like it's falling apart. It's not, because all these things still have to happen.
It's not falling apart, Kevin, and you've got to be careful not to put your hands on and get, and I'm through that phase now. My head isn't in my hands. I'm just basically holding my head up now and just doing whatever I can to add value to my projects, to make sure, damn sure, that when we do see the light at the end of the tunnel, our train's on the tracks and going like fury. I don't want to find myself in the position where you're worried to make technical decisions. You're worried how long the treasury might last. You've got to do the right thing for the shareholders. You've got to do the right thing for the projects. And that always ends up being the right thing for the company. And the right thing for the company is a completely revolving situation, is right for the shareholders.
There can't be, and I'm making a sweeping assumption, but if this other option is taken up, there can't be many companies on the stock market with as many projects and cashed up to be able to advance them to a serious degree. There can't be. There isn't.
I wouldn't have thought so. I mean, what would we have? We'd have about 8 million quid in the bank, and 8 million quid with a 60 million market cap, and that portfolio. If you're looking for value, that's value.
But before you go, Colin, you're on the Sunday roast. What's it going to be this weekend? What are you going to eat? You told us last time you had to be fish.
Traveling, so I think it'll be a nice piece of fish. It'll be a nice piece of fish. I fancy a piece of fish this weekend. Although every time I see your
Sunday roast
homepage and that bloody roast, I think you've taken me back to salivating when I see a roast. So,
you should look at the set.
I'm training myself now. I don't want to pop belly when I go on these visits to these lovely operations. So I've got to get back to my fighting weight, which is about 78 kilos, and I'm about 81. So I'm working on getting 3 off.
Very good. But you should look at the Sunday brunch one now. That's a absolutely cracking English breakfast. And the midweek takeaways.
I managed to talk myself out of those English breakfasts, and that took a few years. That took a few years. That took a lifetime to do, to get away from the black pudding, And
no. When I come to England, it's fill my boots time, I'm afraid.
Yeah.
So,
and I don't know. My last one. I'd only just finished, and I said, "Why did you do that?" And I think that was the stop it now, Colin. That was the end of my just seeing how much I could demolish in the morning, and that's finished now. I don't think I could ever be tempted to a plate which is overflowing with beans, bacon, pork sausage, black pudding, mushrooms, tomatoes.
When you live in a country where those things are not available, Colin, then you can answer that question. When you don't have those things,
Colin, you're talking to the man who shipped 24 tins of baked bean and carried it in his case. He had it, put it onto the flight, man. In my office, right, he shipped stuff to my house. So my office is full of baked beans and gummy bears, fruit pastels, and he literally comes over with empty bags.
All the healthy foods. I know what you mean.
Branston pickle, Piccalilli, pickled onions. Can't get them here.
I can remember when Branston pickle didn't travel, and the manufacturers didn't make it travel, that it was much sought after. The number of times I've been asked, "Would you mind bringing a bottle of Branston pickle with you?" and to all exotic places in the world. The number of times in my previous career that happens is amazing. But also, it was the same with Heinz baked beans. They didn't travel. But, it doesn't matter where you go now. You go to a supermarket in Thailand, a supermarket in America, and a supermarket where, you'll see baked beans and you'll see Branston pickle. So they were pretty low on marketing, if you go back 10 or 15 years.
Well, on that note, Colin, just say thanks very much for your time, and wish you all the best. And we look forward to obviously the news flow to come.
All the best, and thank you very much. Thanks
Kevin. Very much, Colin.
All right, guys. Thanks a lot.
Pleasure to talk again.
Thank you.
So this week we've seen some movers. It's always encouraging to see some of these nano cap stocks move. 200%, 100% is exceptional. 200% is just mind blowing in this market, and then to do 300%, which is what Duke Mount did this week. Do you want to give a brief background of why it went off from the sort of 250,000 market cap, moved up to the £1 million?
Yeah, I mean, basically, I think it had a £250,000 market cap because it was effectively a shell once it got rid of its assets to Mast Energy, which is a great deal for Mast Energy, I have to say. And we talked about that, I think, last week. But it had a valuation of 250,000 because it probably had £1 million plus of debt within it. So basically, the RNS came out to say that debt was going to be transferred at 0.65 when the shares were, I think, 0.04. So it was like 15 times the price. So that obviously had a massive impact on the shares. 120% of the shares were traded in one day, and it did hit over 300% return in the one day, which is just phenomenal. And the quality, not the quality, but the quantity of trading had continued through the week, and ended up finishing at 0.18, but was as high as 0.22 or 0.23, I think, at one point. It was down 20% on Friday, which isn't really surprising, really. I think probably a lot of profit taking and stuff like that. And
sure,
market cap around £1 million now. Especially when those shares are transferred as well, including the £50,000, which was transferred at 0.01 as well, which is another 500,000 shares, or 50 million shares. So it's going to be over 600 million shares in issue. I mean, everybody's been talking on Twitter. It's worth 3p, 4p, 20 and 5p. It's like there's probably going to be an RTO into it. But what and who and why, and will that suddenly mean that the shares are worth significantly more? Possibly not. Who knows? I mean, that is a case of who knows.
Yeah, of course.
But it was a great trade, and I think the vast majority of people have jumped on that as a trade. And it will probably settle down next week, and let's see what happens. But interesting play for sure. And there's been not one as exciting as that, but there's been quite a few trades in the last few weeks of different things that have jumped up. So this is encouraging signs.
For sure. We're seeing stocks moving and a bit more volume coming in. So the other one that we looked at, we actually interviewed Noel this week, or the week that was Edenville Energy, AIM, EDL is the ticker. They basically provided an update on operations at the Rukwa coal project in Tanzania. And really, Noel has joined the company in July, so that they've had a board restructure. But it really does look like this time that they've started to get the ball rolling there, and the actual production is recommenced.
Yeah, he was talking quite clearly, wasn't he? That they didn't want to put that RNS out until they were pretty sure they could get 4,000 regularly every month.
Yeah.
And aiming maybe for I think the RNS stated that 6,000 or higher, because that was the stated aim.
Yeah.
You look at the finances, and if they can get between $50 and $60 a ton, which again the RNS stated they were getting higher than the 50, and you take about a 30% profit margin on that, which might be too high, might be too low, but you can do the maths yourself.
Yeah.
On 6,000, I think you're talking about somewhere in the region of £1.5 million a year of EBITDA, and the current market cap's £3 million. So it's a good bet.
Yeah, I mean,
and they've got a lot of stuff. I think their assets are worth £6 or £7 million, even though, as he said, they're second-hand assets and whatever. But they're still worth money, especially in this mining situation. Yeah. So it's not something that's going to go off, I think. But I think if the management really get hold of it and get cash flow coming in, then they can really develop things in a way that could mean 10,000, 15,000, 20,000, because there is no doubt there is a lot of coal there. It's thermal coal, like it was the pariah, but now we need it.
Yeah, I mean, it was interesting in the interview. He did say that they are approached pretty much on a daily basis for people asking for coal, and they've already, they've got a potential customer base identified, which is in excess of the previously targeted 6,000 tons per month of wash coal. And as you say, at a net price greater than the previously estimated range of $35 to $50 per ton at the mine gate. So, yeah, it looks promising. Low cap. If Ben can do, what did it do at its peak? 300 million, I don't know what it hit, but 3 million quid. It's got to be a cheap miner. Yeah, obviously it's not met coal. It's the pariah, but even though you've got other companies doing thermal coal that are doing well, yeah, it's cheap. And I'm looking forward to the news flow as they move up, as they get off takes in place. They're going to Noel did say that there's going to be some frequent news flow coming out. So definitely one to watch. And at 3 million.
Yeah, I mean, I think fair play would be probably 5 to 7 PE on it or something like that. So what are you talking, £7.5 to £10 million?
Yeah,
based on the 6 million, and they're saying they're potentially going to do more than that, but they're taking it step by step.
Sure.
So he was very confident that we were going to hear some news in the next couple of weeks. So let's keep your eye out for that, because if they actually do agree on off takers and they get them signed in the book, then it's money in the bank, and then not necessarily off to the races. But I think the last raise on this was 25p. And it's currently sitting at 15. So there's a lot of room there. I mean, 10p on 15p is 67% return. So you could be doing well just even at that. So Eastar Resources had an RNS this week as well, which basically said they got the mining license for their rare earth project like immediately. He went and met the people in the government. The project is 20% owned by a government agency as well. And they got the mining license immediately, and they're starting to drill next week, which they weren't expecting to get for 4 to 6 months. So this is like, wow, by next, I think, January, you could have rare earth results to say this is what's available. You're digging down less than 5 to 7 meters, I think, and basically that's where the rare earth is. So it's like dig it up time. It's not a big deal to drill it or anything else. And we've got assay results coming in the not too distant future. So yeah, that's one I'm really looking forward to be honest, because I know it's in Kazakhstan, but I think with the tie-in with the Chinese in Kazakhstan, I think it's not safe as houses, because nothing is safe as houses these days. But I think it is well undervalued because of where it is. But where it is, I think, is probably quite safe.
There was Hydrogen Utopia International as an MOU with Elcard in Toruń in Poland to develop a plastic waste to hydrogen system. So that's one. And we heard Howard.
That was one of the richest guys in Poland, wasn't it?
Yeah.
Wow.
And we heard Howard ranting on one of the podcasts on Friday as well, which was interesting. I think it was quite good to hear because it had an impact. The share price moved 56. I don't know what Powerhouse finished around 60-70% up, I think, on the day. So I mean, it dropped back a lot. It went up to 60% when I was looking at it, well over 60%, but it finished. I mean,
finished 1.38.
138. So it's 58% up on at the end, but it was as high as 65% when I checked earlier on Friday. Yeah, interesting. I mean, I just feel it'd be nice to see some of come to fruition and actually make a change, because those two companies are proper game changers for sorting out an issue that is a real issue.
Yeah, I'm first of a kind, and you're off to the races. I mean, I think he said it in the podcast. First of a kind. It's a £1 billion company, and he's not wrong. Like, he's not wrong. I think he's absolutely right. But I think the HUI thing this week was actually a bit of a game changer, to be honest with you, because that man has got deep pockets from the small amount of research I did. He's a very wealthy guy in Poland, and he basically wants to put these all over Poland. So this was like Alexandra's dream, that suddenly she had somebody with deep pockets that was willing to go hand in hand with them and stick these all over Poland. So, I think potentially if that could happen, you could literally have tens, if not, hundreds of these units just in Poland, along with all the other opportunities that she's created as well. So, yeah, I mean, she's not going to give up. It's going to happen, I think, because of the way she is.
For sure.
And she's determined and she's smart. And, I really do think that's going to go places. PHE, on the other hand, as Howard was saying, was basically a bit of a mess, and they don't have the Alexandria there. But at the same time, they need first of a kind, and when they get it, it's going to fly.
Moving on to one that I actually saw as an intraday RNS, and I think I sent you a copy of it, was a company called Alchemy Capital Investments. They are on the main market, and they're also listed on the Frankfurt Exchange as well in Germany. And they basically announced that their wholly owned subsidiary, the Tees Valley Lithium, have entered into an MOU, or Memorandum of Understanding, with BP Alternative Energy Investments. And they're a member of, obviously, the BP Group companies, which is focused on development of large green hydrogen electrolytic production facility in Teesside. So BP are going to seek to supply green hydrogen to TVL, to Tees Valley Lithium, as part of the High Green Teesside project, which is currently under development. Yeah, it looks good. I mean, it's a big old development project they've got there. But TVL are aiming to produce the world's lowest carbon lithium hydroxide by sourcing low carbon feedstock and powering an electrochemical process with offshore wind and green hydrogen. So yeah, it looks big. It looks big.
Yeah, you sent me the note from Shard, I think it was.
Shard the broker put a broker note out.
So you can look out on the Telegram groups. We'll put it out, and you can have a look at it, the Shard note. But basically, I think it was a net asset value, a discounted net asset value. Currently was about £5 something, I think.
6,614 per share it was.
Currently in £1.10.
Yeah.
So, there's massive upside there, but obviously nobody's buying the upside at the minute, because I could give you 1 million, or not 1 million, I could give you certainly 5 or 10 stocks that they've got notes out that give them significantly higher values, and they're not going there. Brez is another one, isn't it? At 59p, I think it is, and it's 3.5p or 3.2p. So, and that's the net asset valuation today, not what it possibly could be in the future. That's the discounted price, what it should be today.
If they can get this Tees Valley on site, there are more than 700 gigawatts of gigafactories planned for construction across Europe, apparently, and they require 325,000 tons of lithium hydroxide and something like 325,000 tons of lithium carbonate on an annual basis. And currently, do you know what the lithium hydroxide capacity is in Europe?
About 20,000, probably.
0.
Okay.
Okay, so we need this to be brought online, basically.
So basically,
It's a game changer.
They're going to have some customers.
Yeah,
they're going to have some customers. The other one that had great news this week, and it sort of went up and flopped back down again, shock horror, was Echo Energy.
Yeah,
or Echo. There are 2 RNSs, I think, and really the second one was more impactful than the first one. But the first one, I think, was increase in production, and then the second one was
the second one was to do with a conversion of debt again, wasn't it, or something?
Yeah,
like that.
Conversion of debt at a much higher rate, 45p.
Isn't it funny how
0.45p?
If Albert was on now, he'd be like, "Yeah, I've set my bot to look for conversion of debt at higher rates and all that lot," because that's what's moved these stocks the most, right? I mean, obviously, Echo went up probably only something like 10%, 15, 20% or whatever, and it dropped back down again. But it's amazing how the RNS they had on I think it was a Tuesday, which was talked about the production of higher rates of production in Argentina. Didn't really have any impact. In fact, it dropped the share price down, didn't it? It was bizarre.
Yeah, and which is bizarre because they're basically going to be making more money. And then they got rid of the debt at a much higher rate, 0.45 pence, I think it is, instead of what it currently sits at, which is 0.26, I think it is. So, yeah, it looks like that company's really coming together in terms of its being able to look after its debt, and also that the share price should be significantly higher. I mean, in a normal market, what would the share price have done? In my view, the share price would have gone to 0.35, 0.4,
you'd expect
maybe 0.45.
Nearly have gone up to the price, basically,
but the market's just not pricing these things in anymore. It's like, no, we're not doing that.
No.
So I don't know, but there you go. Such is life.
Yeah, you would have expected something. I mean, you think that Duke Mount might have actually got up to the debt price, but it obviously only got to a third of it, or not even that. But
yeah, but if people, Duke Mount was slightly different, I think, because ultimately with Duke Mount, nobody knows what the RTO is going to be, so nobody knows what it possibly could be. So if you go to 0.65 with the number of shares, you're valuing that company at close to £4 million.
Yeah.
Right, £4 million for a shell with nothing in it, which you don't know what's coming in. No, that's way over the top.
Yeah, but there is some argument, and we've been through this before. As a main market, with the new rules, you have to be 30 million capped. You can price the value anywhere from the listing price or the cost of of listing of 200 grand or whatever it is, all the way up to 30 million. If that makes if you take my argument.
Yeah. No, you're right. You're right, and I think, as you said, the Twitterati and all the people who were pumping it this week, that's exactly what they were trying to say, was that, get in, this has to go higher. So why did it go down 20% today? Ask yourself the question.
Yeah.
Everybody was piling out after making a profit.
So the other news this week, a company that sort of very much sit under the radar to most investors, and I don't think you probably appreciated the story until we sat down with the chairman, Dennis Jensen. Basically, there was an RNS on Wednesday morning, and it announced that the drilling had hit targeted cobalt zones and wide pegmatite intercepts at Broken Hill. They've got the Taurus Tank prospect within the Broken Hill project's east zone, and they've got a couple of other projects as well. Now, we did actually put out a podcast yesterday, the Saturday brunch, and I encourage you to go and listen to that, and listen to Dennis talking about the different assets and the cobalt and things like that. And there's a lot of useful information in there that you probably wouldn't have realized about cobalt. So yeah, what are your thoughts on Castillo? And again, the valuation is like 14 million. And they've got, multiple 100,000 tons or thousands of tons of cobalt, which I think you said the cobalt per ton is something like $70,000.
It's $70,000 a ton.
Yeah,
they have 21,000 something tons already JORC reported, and that's going to increase as this drilling goes on. So the cost of the value of in-ground value of that is $1.5 billion.
The one you alluded to was actually the Zambia copper project. So that was they basically went into an option agreement where they received $100,000 option fee with a company called Hyperion Copper, who are a UK-based company, to sell that Zambia copper asset for circa $4 million Australian plus the milestone payments. So if they exercise that, and Hyperion Copper lists on the AIM market, and then later later this year, then obviously Castillo will retain more than 25% stake with the right to appoint one director to the board. So it looks like it's just a free carry, really, doesn't it? And a nice little bit of cash as a milestone payment.
Free carry. They might get diluted a fair bit if these guys take it on, but even so, his comment was really that their experience is not in Africa, even though he was from South Africa. And their experience really is in Australia, where he's been for a number of years. And he was excited. But I asked him which asset was he most interested in, and it was Broken Hill, is it? So, yeah. Have a listen anyway. It's another podcast you can listen to. It's not very long. It's called Saturday Brunch. You can get it on Audio Boom or any of the play places you get it.
On that note, I think we'll wrap it up and say have a great weekend, or what's left of it, and we'll catch up next week.
Yep. Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.